How money laundering works, and when money isn't clean. What if every dollar you spent carried a hidden story? Each year, trillions of dollars move through the global economy, but not all of it is clean. Behind luxury cars, booming businesses, and real estate bought in cash, there may be something else. Money with no clear origin, and one of the most powerful tools used to make it appear legitimate. It's called money laundering. According to the United Nations, an estimated $800 billion to $2 trillion is laundered globally every year. That's 2 to 5% of global GDP. So how does it work? Why does it matter? Let's break it down. Section 1. The invisible problem. Imagine a large sum of money appears, but there's no explanation for where it came from. That's a problem. You can't just deposit it in a bank, because banks and governments will ask, where did this money come from? In financial terms, this is unverified money, funds without a transparent or legal source. To use it freely, to buy property, invest, or even save it, someone needs to make it look legitimate. In 2023, the U.S. Treasury reported over 3 million suspicious activity reports, many related to large, unexplained cash flows. That's where money laundering begins. Section 2. How it works. Money laundering is the process of making questionable money appear clean. It typically involves 3 key stages. First, placement. The first step, getting the money into the financial system. This might involve cash-heavy businesses, real estate purchases, or small deposits split across multiple accounts. This is the riskiest stage. The money is still exposed. Second, layering. Now comes the distraction. The money is moved again and again between banks, across borders, into crypto, back to fiat, all to hide the trail. One day it's from a shop in Bangkok. The next, it appears as a foreign investment from a shell company in the Cayman Islands. According to the Financial Action Task Force, over 60% of laundering schemes involve anonymous shell entities to obscure ownership. 3-point integration. Finally, the money re-enters the real economy, looking clean. It might be used to buy property or vehicles, invest in legitimate businesses, or sit quietly in a savings account. Example. In the Danske Bank case, more than $200 billion flowed through suspicious transactions between 2007 and 2015, mostly unchecked. On paper, everything looked fine, but the origin, still unclear. Section 3. Why it matters. Money laundering doesn't just hide money, it hides its true story and erodes the trust behind financial systems. It allows unverified funds to quietly enter the legitimate economy, distorting housing markets, skewing business competition, weakening financial transparency. Interpol reports that global laundering channels are used to sustain many large-scale financial networks that operate in the shadows. That's why governments around the world are responding. Banks now use AI to flag unusual transactions. Countries share financial intelligence. Regulations require more reporting and transparency. In 2022, a major European bank was fined €3.7 billion for failing to prevent suspicious money flows through its system. Conclusion, a question to ask. Some systems have grown and thrived simply by knowing how to make money look clean. The more complex finance becomes, the harder it is to tell what's real and what's just a polished disguise. If someone goes to such lengths to clean their money, what does that say about where it came from? Next on ExplainFi, why every country is in debt and who they owe. A clear look into how global debt works and why nearly every nation is caught in it.